Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Sunday. Let's take a look at some charts for setup Sunday. Going down the list here, we certainly have intra-week cross currents coming up. I think there's a CPI released this week. We had a jobs report last week, a bunch of jobs numbers on top of that last week that were quite bullish for markets, considering they were significantly higher than expectations. We'll take a look at that briefly. That really helped push the dollar higher, which shouldn't be good for us. It also pushed rate bets for 50 basis point cuts lower, which shouldn't be good for us. But at the end of the day, nobody wants a recession. We want to keep the music going as long as we can. So if the jobs numbers are fine, then we're fine. Everything's fine. Everything's fine. Do not look into the jobs numbers. No, I'm kidding. Everything's fine on that front based on the numbers. That means rates down probably slower than the market expected. That means interest rates on the long end, short end. We'll take a look at all that tomorrow, but that also moved up a little bit through the week, which shouldn't be good for us. There's this yin and yang between dollar strength, risk on versus risk off, inflation expectations, bond vigilantism, and whether or not there's this perception that we're taking inflation expectations seriously or not. That's a conversation down the road, but that may be cluing into why the dollar strength we've seen, the rates changes that we've seen last week, isn't as bearish as it feels, as it should be realistically, because it just means we're in the Goldilocks zone, and that is a tailwind for sure. Now, in the crypto half of this schematic, we're certainly not full bore bullish. We certainly haven't held any higher highs. We're making potentially higher lows. We're holding above the cloud on the daily. That's good. We don't really have price momentum per se yet. This is like we're wish casting, right? This is the dream. This is what we want to see. Options, warehouse, FTX money, right? Everybody's going to get 16 billion and they're going to all just market buy BTC. Isn't that what they're going to do? That's what they told me. So we don't quite have most of this yet, but there's certainly an expectation of many that should we start to break out, momentum will come back in a big way. We'll take a look at gold in China at the very end, but that's another place where we may see people just looking around. You know, they're looking around like people look at alts and they look around and they say, oh, these 5 alts, relatively, maybe they're ready to move. The big money may be looking around after China, after gold, for something else that hasn't moved in 6 to 8 months. Oh, wouldn't you know? There's this thing called Bitcoin, very accessible. And of course, the outflows and the unlocks on the coin side of things, mostly behind us. It doesn't mean they're still out there lurking or not still out there lurking, because they very well could be. And we may get another Gox headline, a couple of them, right? Just randomly, like we got some geopolitical stuff randomly. We may get more geopolitical stuff this week. This goes back to cross currents. Just when you think it's safe to go back in the water in your 100x long, boom, margin call, right? You don't know. So I don't think it's 100x long season, but the more we can just hold above the daily cloud, the better. That's it. Is that so hard? We just hold above the daily cloud. We don't need to go anywhere. We don't need to do anything. We can just chop around above the daily cloud, which is roughly at 60K. We'll take a look at that. Look at the weekly flows. Weekly flows last week for both Bitcoin and ETH were negative. Week before that, we had 1.1 billion come in on BTC. So definitely a bit of an about face, but in the flows, you can see the price. You can see all the local highs we've had since the ETFs launched. So much like we want to stay above the cloud, you know, it's just the easy things. We just want 200 million a day, right? Is that so hard? We'll take $1 billion a week. I would settle for 500 million a week. Is that so much to ask? I mean, there's a lot of money out there. Looking at the dollar, this is another thing. Like we want being the risk on people. The risk on people want the dollar to go a certain way because we want the tailwind. Historically, we've seen the tailwind when the dollar breaks below 100. Now, it makes sense that it bounced based on the fundamental news. It makes sense based on just technicals, right? It was down like 12 weeks in a row. Fine. What we don't want to see is parabolic advance like we did in 2021 and 2022. That's no bueno for BTC and for risk. So if we can bounce around here, fine. It's already bearish on the cloud. But ultimately, sub 100 is where we want to be. And potentially, this may help extend the cycle. This is, I don't think anyone's considered, but let's say we break out for whatever reason, 70s, 80s, whatever. And then later on, depending on who's in office, at the end of the day, it's not really going to really matter in the long term. But for some political reason, the dollar gets weakened, whether that's printing money or on purpose, whatever. That may help push BTC even further down the line. So what I'm really saying is, you know what, maybe we don't want the dollar breaking 100 anytime soon. If it is inevitable that we do break 100, maybe it's worth just waiting, waiting. Looking at the bond stuff, all the bond stuff got angry last week, price-wise, because rates went higher, basically across the board. So the market was pricing in a certain degree of cuts. That reality got pushed back a little bit because the jobs numbers were good and rates went higher. So rates got a little bit ahead of themselves as far as expectations were concerned. And much like the dollar, you know, we really don't want the bond stuff playing out super bullishly. We want this kind of just chopping around. Certainly doesn't need to be bearish, but we don't want the TLT to look attractive. Now, many people don't think it will look attractive over the long term, but the 2-year was certainly attractive. That's pulled back. The aggregate bond ETF still looks fine. IEF looks fine. I think SHI is probably where you don't want to be in the near term for a little while. This is the headline on the jobs report. It blew away expectations by a lot. It was 254K. I think the previous 2 months also got adjusted higher. A lot of this was government employees, teachers, but it said something for everybody, depending on what side of the spectrum, right? If you're bearish, you're saying the numbers are fake. Okay, fine. If you're bullish, you're just looking at the number. Cool, we go higher, right? And because of that, the 50 basis point cut expectation essentially went away. It was 50-50. Now it's almost certainly going to be a 25 basis point cut a month from now, and potentially no cut. Potentially. We'll see. I don't think CPI is going to push this towards no cut because I think CPI is going to be just fine. And it's not this month's CPI, it's next month's CPI. I'll talk about that tomorrow. Looking at Bitcoin, I still see some people looking at like, since halving, we've done nothing. Since halving, we're underperforming. It's over. It's all over. Yeah, well, we've never hit an all-time high pre-halving either. So you got to take that into consideration. I certainly much prefer the performance since cycle low, the black line here. We're nestled in. The rest of this, we're a little underperforming previous 2 cycles, but we're right on track for expectations. And I mean, if you want to get super bulled up, are you ready? Let's say this is 1, and a 6x would be the 2020 cycle from here, and a 10x plus would be the 2016 cycle from here. If we're going to look from halving, which I don't think is the correct thing to do, I do think you need to go from cycle low. But in any event, we're still on time. We got seasonality, we got October stuff to deal with. One thing I came across in my notes today was looking at days since last all-time high. And what's interesting is if you look at the first all-time high and 1,000 days since that all-time high was the current all-time high. If you look at the actual next all-time high, not the current all-time high, 1,000 days from that is actually coming up. It's coming up in November. So in this weird way, 3 years after all-time highs, we're still on track for that. We can also look at previous all-time highs, previous cycle lows. We can do some calculations and expectations. And all of this is within the realm of the power law. It's within the realm of the cup and handle measured move target. So I wouldn't overcomplicate this because I still see a lot of people looking at a lot of silly stuff. I don't really understand why. But hey, whatever works for you. This is the power law corridor. So far, so good. We don't need to get there in a hurry. As a matter of fact, it's better if we take it slow. Then we hit the corridor ceiling at a further point along that's going to be higher. So as painful as sitting through 6 to 8 months of down chop is, it may be for the better, assuming we break up here. Looking at daily cloud, we're holding above the cloud. We tried to break down, held onto the cloud there by our chinny chin chin. Maybe this is still a double bottom. Maybe this is still an inverted head and shoulders. I think it's pretty messy on the spot chart. It's cleaner on a few other charts we'll take a look at. Just measuring the fibs from the double bottom, that gives you essentially an all-time high retest, which I don't think we'll see this week, but within the month, certainly possible. And the other targets are above R3 yearly pivot, certainly possible within the quarter, but probably not this week. This, of course, all falls apart the moment we start closing below the cloud. If we lose 60, if we lose 58, if we lose 57, if we dare to dream of a new lower low, then we are in a lot of trouble on the bullish perspective. So that's the stop loss as far as I'm concerned. Just the cloud, like it always is. As long as we can hold above the cloud. Again, we do not need God candles every day of the week. We just slowly continue to build the base, to build the bullish strength, and take it from there. Last week I was talking about the 5200 crisscross and retest. If we look at last time this year, or this time last year, we went and tapped the 50-day moving average. We've now tapped the 50-day moving average. This doesn't have to play out the same, but looks like it's going to rhyme. And we may get our 5200 cross here within the next couple weeks. Just more evidence that we're making higher highs. This is, of course, lagging, but it does give you a sense that we've reset momentum completely, obviously, at this point, right? Reset momentum completely and ready for new highs. Looking at CME futures, we're also above the cloud. I think the inverted head and shoulders probably a little cleaner on this chart. Cloud flipping bullish TK cross, price above cloud. All this looks good. Using just the CME futures, the last time the cloud was this bullish was all the way back here, and that was right before Germany started selling us off. So what is it going to be this time, Mr. Market? What are you going to throw at us to dash our hopes at 65K plus? We'll see if there's anything left. But so far so good on futures, and the 5200 cross also, just like last time, isn't really crossed yet. You know, it's going to get very close. It's going to get very, very close. But just another sign that we've reset, just like we reset all the momentum in 2023 before going higher. We've certainly reset all the momentum on CME futures before potentially going higher here. Looking at the COT report for BTC futures, this is like a dream scenario. Now we can agree to disagree on commercials versus large spec being the important driver here, but what you want to see is large spec very short. You want to see commercials very long, and you want to see small spec retail basically non-existent or short as well. Because it's crypto, small spec is rarely ever short, net short. Anyway, so this is the exact setup that you hope to see for a squeeze, and the opposite, this would be a long squeeze, in this case potentially setting up for a short squeeze, of course coming from Jason at Crowded Market Report. He doesn't tweet out or email out or send out this data unless there's something interesting. So for him to actually tweet this out means it's definitely interesting to him. And one of the most interesting charts available on the crypto side is MSTR. I'm not a fan because in the long term, this thing probably ends in tears for everybody, including spot BTC, but that's a 2026 problem, okay? In 2024, in current year, it's full send territory. We are hinting at, especially after last week, hinting at new all-time highs for MSTR, as well as this graphic here showing the NAV premium. This is 1x. This is fair value, basically. This is 2x. So we are approaching a new multi-month high on MSTR NAV premium. What that exactly means and why, and I don't really know. It doesn't really make any sense to me. But the one thing that could push us down on spot is if there are people who are still short MSTR long spot to capture this, some sort of carry trade, arbitrage, whatever. If this breaks out, this will cause them to close the long side of their spot BTC position to cover the MSTR short. I hope those people are still or aren't in the market anymore, but it's one thing to consider because this looks ready to go. Would not surprise me at all this week if this breaks higher, even without BTC. Looks very, very strong. If we want to measure this, this is the cloud as well. Looks great on the cloud. Measuring this 300, 400, something silly. Just taking the depth of the range, measuring it higher. So it looks really, really good for a move this week. And BitX is another one that obviously is not MSTR, but it is showing signs of bottoming attempts here. It is trying to ascending triangle, triple bottom, inverted head and shoulders, 4-hour cloud breakout, trying to break this diag. You can see the difference. You know, this is kind of the evidence between the strength of the product of MSTR. Over the long term, it's going to be a trap for a lot of people. It's gonna drag BTC down, but that's a 2026 problem, right? So I'm definitely on that train where it's going to be an issue down the road. But if you're comparing this as a 2x product versus this with volatility drag, I mean, it's no contest, right? Nevertheless, still looks pretty good. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Parrot Ventures Inc., PVI, DBA, Kraken. Looking on Kraken here, there are quite a few coins doing quite well. Popcat, of course, flavor of the week stuff does well, and then it just gets drained and drained for months and months and months, occasionally popping back up. One thing I noticed on Tau was it looks like it reconsolidated and is ready to break out again. You've always got this issue of, say you're long from the breakout of the inverted head and shoulders and you're looking at the 12-hour, 8-hour, 4-hour Williams fractals. Is it worth re-entering this or not? That's an individual personal question, but holding above the clouds is a great sign. Getting this bullish TK recross is a great sign. And maybe even for the less risky stuff like BTC, it's a good sign to see some of this stuff, some of this junk breaking out, right? That's kind of what we want to see. Looking at SOL and ETH, SOL looks worse than MSTR, better than ETH, worse than BTC. Very tight range still. If BTC breaks up or holds its highs, you could easily see SOL continuing past 162. So that's something to watch this week. Can this break to 162 and just sort of hang there? Let the cloud flip bullish again. Let the moving averages catch up. I'm sure the moving averages are crisscrossing or close to crisscrossing up here. So depending on your feelings about SOL or ETH or coin or whatever, right? I think there's better places to trade this week than perhaps coin. Personally, I don't think coin is a chart that looks like it's going to move this week. I don't think CleanSpark is a chart that's going to move this week. But yeah, they have flavors of bottoming processes in action, much like everything else. I just would be careful of assuming the laggards will catch up when the strength is already ready to go, like MSTR. If we're just being honest, IREN looks better to me than coin or CleanSpark, and ETH as well. And they're similar. They look the same, right? Here's a triple bottom. We're basically doing the same thing in all these charts in just slightly different ways. But ETH certainly lagging SOL. It's probably ahead of coin and CleanSpark. But it's just personal preference. Outside of cores, IREN looks the best to me on the mining front, certainly. And if we are all systems go in October or Q4, then all this stuff will probably move. It's just a matter of how much and relatively what's going to outperform here. I would assume MSTR is going to outperform everything first, and then we may see some liquidity slosh around into the miners or in spot or whatever, right? I would also watch for, on MSTR, watch for the, if I can find it again, watch for the premium to NAV. Because if this goes to say 2 to 4 for some stupid reason, and we are up here, then yeah, you better believe that's a pretty good reason to close those trades and move on, rotate around to something else. I don't know realistically where the premium could go, but there's a lot of like super moon boy people who think the premium can just go to wherever. But that's certainly going to be an influencing factor on whether or not people are rotating around. So SOL, ETH, fine. Some of the crypto adjacent stuff, fine. And then there's a bunch of alts that look great still to me. Triple bottoms all over the place. Say, Apt, Rune, Stacks. ICP kind of looks a little different than all the rest of these. We've got the Doge higher time frame bottoming process. So there are plenty of options that week over week here have been able to hold the levels that they need to hold above the cloud. Right. And now this isn't SUI, it's not Tau, it's other stuff that's also moving. So it's broadening out even beyond the leaders there. And that's good. That's good for alts. And the crypto side of the equation is probably sniffing out the fact that, okay, based on the numbers, we don't really have a recession. The S&P, which is this, S&P futures, looks ready for higher highs at some point. It doesn't need to push higher. It's not screaming that it's ready to go. Not like it was here. This was, to me, down here, a clean-cut case of a cup and handle. This maybe just a vanilla I don't know, maybe cup and handle too, right? But it looks fine. No issues whatsoever. 6,000 sometime this year, certainly possible. NASDAQ also looks fine. NQ futures, I don't see any issues here on the high time frames. And it would certainly be harder for crypto to do well if the stonkery wasn't doing as well. NVIDIA is another one this week. We really don't want NVIDIA to steal our thunder, but man, it looks ready to go. I think everybody's pretty much sick of NVIDIA this year. As far as the people with a lot of money, the allocators, do they really want to reallocate to NVIDIA after just allocating to China last week? But from a technical perspective, this looks really good. Looks ready for higher highs. As long as it can hold above the cloud, should be good to go at some point. Now, I don't know realistically how high this goes. You can measure it. It measures to like 200. But the cloud tells no lies. Bullish TK cross, price above cloud. You're going to get a bullish cloud this week if it can hold those levels. And it's certainly reset momentum from June at this point. So at the very least, an attempt higher would make sense. On SMH, you still have head and shoulders vibes potential here. It's looking less and less likely that this is going to break down, which is, again, probably a good thing. But I just think there are better places to trade. There are better charts like IGV. IGV, I think this is a new all-time high as of last week or very shortly here. I mean, this is, again, a multi-year cup and handle. Looks beautiful. The biggest, boldest, most beautiful cup and handle you've ever seen. But seriously, from a technical perspective, if you had a choice, you trade this chop mess or this, you're going to go with IGV all day. It's just going to be interesting what really breaks out here. You know, does NVIDIA drive NASDAQ this week? Does China drive other stuff? What's going on with, you know, things like KWeb? Huge breakout to 38 at this point. This measures a little bit higher still. So it does have room to run, although realistically, is it going to run again this week? Maybe. If they keep juicing the markets. You've got FXI also breaking out. And you'd think eventually some of this China stuff is going to rotate into other stuff, including BTC. And this, of course, is gold. We'll end it here. Gold has reached its multi-year inverted head and shoulders target. Definitely can go higher. But I think if you're looking for a gold-like investment vehicle, you're probably going down the line to other metals, copper, silver, platinum, palladium, or you're going gold miners, or might I suggest the humble, the mighty BTC. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.